The U.S. government says,
we've cut spending and we're going to continue to cut spending.
we're going to cut spending. What happened? Riots in the streets. Let's say they're going to reduce their debt. We're just going to default. That's one way to reduce debt. Just say, hey, I'm not paying this back. What happened? Maybe war, maybe more riots, but no one can. Here's what happened. No one will lend to them anymore, which means they couldn't cut spending, which means riot. Or they could redistribute wealth. The Bolsheviks tried it. Didn't go so well. It's just not politically palatable in the Western world to straight up say, I'm just redistributing wealth. What's that? Yeah, they get sneakier options like PPP loans, stuff like that, Safer Act. But they have the ultimate wild card, the ultimate weapon. They can print money.
That's a great asset. More inflation. What a stupid son of a bitch.
If they're out of cash, what do? They just print more of it. And then we'll go into the long-term effects of that. But we already lived through this. We're living through this. So remember, they have the only politically palatable option is to print money. One person's buying power is another person's income. So people's income were rising because access to credit was rising and there was more money flooding in the economy. You see how it's a cycle. So our wise overlords in the central government and the central bank have one tool to manipulate this. Harold, what is it? So what they're trying to do to control the short-term debt cycle is the interest rate. So the pandemic, oh my God, the whole economy is going to shut down. What do we have to do? We have to lower interest rates. The problem with COVID is they just hit the gas on printing money. There's going to be certain effects to that we've already lived through. And the problem, once they hit COVID, they dropped the interest rate to zero, and it still wasn't enough. What were their options? They had to get money into the hands of consumers. So they did PPP loans. They gave us all loans. And then just in our little town in St. Louis, managing 600 units, we've collected over $2 million in rent from Safer Act, from coronavirus acts. So they just started, instead of giving money directly into people's hands, they give it to the property management company. So everybody spent. And what did everybody do? They spent. So we all lived this. This is 2021. And we all were saying, hey, this is going on too long. Maybe when we were flattening the curve, this was a good idea. But the curve was flattened, the vaccines were out, and there were still 0% interest rates because everybody was having too much fun. When else has this happened? Maybe it's only happened in the last 2 years, and that's why you've been able to predict it. So I'm going to take a quick trip down memory lane. Who here knows about the Weimar Republic? So this was the government in Germany that hyperinflated the currency. It was easier, it was more productive to burn the cash for fire than it was to spend it. So the other thing is, these inflationary cycles have happened so many times over the last 5,000 years. There is a playbook. This thing on the right is Zimbabwe, where they went to super crazy hyperinflation. Now, I don't think we're in danger of that because we're the reserve currency, and that's outside the scope of this conversation. But this only happens in poor, broke countries, right? This never happens in the United States, right? How many times has the currency collapsed in the United States? Anybody know? Who said 2 or 3? Kurt, when were they? So it generally happens around wars, and we're going to get into this, but the Revolutionary War, our currency was completely defunct. Thomas Jefferson, all them congressmen, all them founding fathers, horrible when it comes to fiscal policy. And they just printed money, but they won. So maybe it was worth it. The Civil War, we had to go off the gold standard and we went to paper money, and then the Confederate currency completely collapsed, became worthless. You can make the argument that in the 70s, the currency collapsed and we went off the gold standard. That's up for debate. But it has happened in the most productive country in history. So in the Revolutionary War, we had no gold, no printing press, nothing. And so how were we supposed to defeat the greatest army on earth? They just made up continental currency and it went completely bust. So the lesson I take from this is, just because we're in an inflationary cycle and a currency goes bust, are we hosed? Or can we still win? We can still win. And the founding fathers, these guys, I love them. It's the same playbook. Just quick history, what they did. They used this inflated currency, bought hard assets with it, knowing it was going to default, but they had title to the hard assets. So they got their hands on as much currency as they could. They bought hard assets with it. They let this fall, but then they still had title to all the hard assets. So they were wealthier. They knew the rules and they were playing the game. Soldiers are expensive. You got to feed them. You got to shelter them. You got to equipment them. And then their pensions are really expensive too. I'm not saying it's good or bad. I'm just saying it's expensive. And every day in Iraq, we would shoot. It was awesome. And I became a very good shot. But I never asked myself, like, who shoots right now? How expensive are bullets right now? Never occurred to me, hey, who pays for this bullet to my target practice every day? But who was paying for it? And were they paying with it with cash for money earned? Or what were they doing? How were they doing it? They were borrowing with it. As soon as the war started, what happened to interest rates? They went straight down. After 9/11, interest rates went straight down. And they stayed down throughout the war so they could pay for the war. So the reason I have this weird knowledge of this is just because I lived it. And then if you look at American economic history, which I have. Anybody else did that for a hobby? And you tie it in with military history, it's fascinating. Revolutionary War, already talked about it. Currency went defunct, there was a depression. War of 1812, there was a depression. Anybody heard of the Depression of 1820? I have, because they had to print money to fight the British again. Civil War, after the war was ended, another depression. World War I. And the fun thing is, after the war, when you win, there's a boom, but there's also a bust. World War I, same thing happened. Created the Federal Reserve, fought World War I. Anybody remember the Roaring '20s? Bunch of pretty money in the economy. What happened after the Roaring '20s? Kaboom! It all fell apart. To get out of that depression, what did we have to do? Had to fight another war. So now there wasn't a Great Depression after World War II, but there was a stagnation in the 60s or in the 50s, that another recession, like a 1992 recession. And then what was the thing that made us finally get off the gold standard? What did they have to pay for in the late 60s and 70s? They had to pay for Vietnam. That's why we had to go off the gold standard, and they wanted to just double tap it with not just a real war, but then war on poverty. There was not enough money to pay for a war on poverty and Vietnam, so what did they do? Print money. What did they have to do to print more money? They had to untether the dollar from gold. Don't put right and wrong behind it. Like, that's not the point. It's just a playbook. Was it worth going into massive debt to defeat the Nazis? Probably, yes. That's a debate outside the scope of this room. Was it worth it to defeat the British, to unleash the productivity we've seen the last 250 years? Yes. Can you borrow and produce your way back? Yes. So don't put value statements on any of this. This is just, it's like a football play. There's nothing right or wrong about a 42 draw. Just run the play. Because it always comes down to this. If you haven't raised your productivity and you want to pay for a war, there's eventually a deleveraging. So they have to print money, or then which initiates the economic cycle. You got long-term debt cycle, short-term debt cycle, and a productivity curve. What do you actually control? Your productivity and your spending, but mostly your productivity will not make CNBC. Your productivity will not be talked about on MSNBC, but control what you can control. And you can control your productivity. And then once you can control your productivity and you know the playbook, that's why I'm bullish. That's why I'm excited.
Hey, thanks for watching the video. If you make over 300K per year, I think my program could be great for you. We're going to find beat up houses like this one behind me that we just started rehab in. I don't know if the video is doing justice to how bad these floors is. And then let me take you through a spin here. This is the kitchen. Don't notice there is no kitchen. But our investors love deals like this because they know in 3 weeks, this is going to be a beautiful kitchen waiting for either a new homeowner or a new resident to rent. So if you're interested in investing in real estate in a completely passive manner and want someone to find the house, to fix the house, to find a tenant, or help you sell it, click the link below to book a call.